Here's a daily recap for July 10th. Today's top stories: Bitcoin breaks new records. Initial unemployment claims dropped to 7-week lows, while continuing claims hit new highs. The Pentagon is set to become the largest shareholder in the nation's sole rare earth mine operator. Yemen's Houthi rebels killed 4 crew members and forced costly oil shipping detours. The 10-year yields jumped to 4.37%. And major federal health care reforms in the new Trump tax and spending bill impose 80-hour monthly work and service requirements and reduce the coverage for 11.8 million Americans by 2034. Markets rallied on Thursday as traders bought the dip following Wednesday's tariff announcements on copper and pharmaceuticals. As of midday Eastern Time, the Dow gained 200 points, the S&P 500 gained 0.4%, and the Nasdaq was up slightly, gaining 0.17%. Gold held steady at $3,327 an ounce. The dollar index, DXY, jumped 0.2%, while the 30-year Treasury yield fell by 0.23%. Crude oil is down 2.7%. According to reports, diplomatic talks between the U.S. and Iran will resume next week in Oslo, which may have contributed to the decline in oil. Bitcoin was one of the biggest movers, climbing 3.6% to $113,000 a coin, breaking a new record high. This move was driven by massive institutional ETF inflows, totaling nearing $15 billion since April. The rally was further fueled by Federal Reserve rate cut signals found in Wednesday's release of the June FOMC minutes. Bitcoin is also viewed as a hedge against inflation and deficit spending. Here's what Jack Mallers, CEO of Strike, had to say on my show. Take a listen.
The way my dad described to me is Bitcoin is the best expression of currency debasement. It's the best way to short the dollar. He's always talked to me about this portfolio that he's been trying to build, which is short dollar. He owns, historically, real estate is a way of short dollar, exchange stock. So owning the CME stock, owning the Chicago Board of Trade stock. The reason that that is short dollar is because if you live in a currency debasement era, everyone's a speculator, whether they know it or not. So exchanges are great businesses because everyone needs to buy a stock, buy a bond, buy something to avoid getting debased and things inflated out of their life.
Treasury yields initially rose this morning following economic data that reinforced labor market resilience, with the benchmark 10-year yield increasing 3 basis points to 4.37%. After midday, however, yields fell sharply back to Wednesday's lower levels, continuing a slide that commenced in late May. The move came a day after a successful $39 billion auction of 10-year notes that helped arrest a 5-day sell-off in the bond market. Wednesday's auction drew notably strong demand with a bid-to-cover ratio of 2.61, which ranked in the upper quartile of the past 50 auctions. Meanwhile, direct bidders purchased their highest allocation on record. The auction yield of 4.362% came in slightly below pre-sale trading levels, signaling that the appetite exceeded dealer expectations. Market participants remain focused on the fiscal implications of recently passed tax legislation, which the Congressional Budget Office estimates will add $3.4 trillion to national debt over the coming decade. Initial jobless claims declined for the 4th consecutive week, falling by 5,000 to 227,000 in the week ending July 5th, according to Labor Department data released Thursday. The figure came in below economists' forecast of 235,000 applications and marked the lowest level in 7 weeks. The 4-week moving average, which smooths weekly volatility, decreased to 235,500. This sustained decline reinforces perceptions of labor market resilience despite ongoing economic uncertainty stemming from trade policy developments. However, continuing claims, filed by those receiving benefits for at least 1 week, rose by 10,000 to 1.965 million, reaching the highest level since November 2021. This divergence between falling initial claims and rising continuing claims suggests that while employers remain reluctant to conduct layoffs, unemployed workers face increasingly difficult conditions finding new positions. In other words, there's a hiring freeze. Here's what Eric Basmajian, founder of EPB Research, had to say about the labor market on my show.
What we see is that the hiring rate is extraordinarily low. If you don't have a job, it's very, very, very difficult to get hired right now. However, if you do have a job, we're seeing still a record level, low level of layoffs. So there's not a lot of layoffs, but there's no hiring at all. And the people who are getting hired mostly on part-time and jobs that they really are not ideally that they really ideally want. They want a better job or a full-time job. They're only getting a part-time job. What the unique part about this cycle, though, is this middle ground of this slowing of labor intensity. When you look back at this chart, there's very short windows where this throttling of labor intensity occurs before companies used to shift to layoffs and cause a recession.
Recent labor market data indicate that job seekers now remain unemployed for approximately 6 months, with 23.3% of the unemployed being out of work for 27 weeks or longer. June employment figures showed 147,000 jobs added, although 94% of those gains were concentrated in healthcare and government sectors, reflecting limited hiring breadth across the private sector of the economy. Meanwhile, the Defense Department announced on Thursday that it will acquire a $400 million equity stake in MP Materials, the operator of the sole operational rare earth mine in the United States, located at Mountain Pass, California. This move will make the Pentagon the company's largest shareholder with approximately 15% ownership. The landmark investment represents a direct government intervention in critical mineral markets historically dominated by China, which controls 70% of U.S. rare earth imports and 95% of global magnet production. MP Materials CEO James Litinsky characterized the arrangement as a public-private partnership rather than nationalization, emphasizing the company will retain operational control while gaining a strategic government partner. Shares of MP Materials surged between 40 and 52% in morning trading following the announcement. The agreement includes a $150 million Pentagon loan for expanding rare earth processing capabilities and $1 billion in financing from JP Morgan Chase and Goldman Sachs to construct a second magnet manufacturing facility designated the 10X facility, expected to produce 10,000 metric tons annually beginning in 2028. The Defense Department committed to purchasing the entire output of the new facility for 10 years, while guaranteeing a minimum price of $110 per kilogram for neodymium praseodymium oxide, a compound essential for magnets used in defense systems ranging from F-35 fighters to submarines. Treasury Secretary Scott Bessent indicated last week that negotiations with China would increase rare earth magnet supplies, though the Pentagon investment signals continued pursuit of domestic alternatives instead. Meanwhile, Yemen's Houthi rebels escalated their Red Sea campaign this week, sinking 2 cargo vessels and killing at least 4 crew members in attacks that sent oil prices moving. Oil prices are down today, though, on Thursday, July 10th. The Liberian-flagged Eternity Sea went down Wednesday after being struck by drones and missiles, with European naval forces confirming that only 10 of the 25 people aboard have been rescued as of Thursday after spending a full day in the water. The Greek-owned vessel represents the second ship sunk by the Iran-aligned group this week, following Sunday's attack on the Magic Seas. 11 crew members from the Eternity Sea remain missing, while the United States has accused the Houthis of kidnapping several survivors. The attacks continue to disrupt the critical maritime corridor where approximately $1 trillion in cargo passes annually, forcing vessels to reroute around Africa's Cape of Good Hope and adding 10 to 14 days to shipping schedules. This makes a dangerous escalation that threatens to transform one of the world's busiest shipping lanes into a high-risk zone for all maritime commerce, from container ships carrying consumer goods to bulk carriers transporting grain and industrial materials. The Houthis claim their maritime operations support Palestinians in Gaza, targeting vessels they believe have connections to Israel, the U.S., or the United Kingdom. On changes to Medicaid coverage, the One Big Beautiful Bill Act, signed into law on July 4th, introduces sweeping changes to Medicaid that will affect millions of Americans. The Congressional Budget Office projects that 11.8 million more people will lack health insurance by 2034 as a result of the healthcare provisions in the $1.2 trillion deficit reduction package. Starting before 2027, able-bodied adults aged 19 to 64 must complete 80 hours monthly of work, education, or community service to maintain Medicaid eligibility, with exemptions for veterans with disabilities, caregivers of young children, and those facing short-term hardships. The legislation fundamentally alters the framework of the Affordable Care Act's Medicaid expansion. Federal matching funds for states covering undocumented immigrants through emergency Medicaid will decrease from 90% to 80% starting in October 2026. States must now conduct eligibility reviews every 6 months for expansion enrollees rather than annually. Beginning in October 2028, adults in the expansion population will face cost-sharing requirements of up to $35 per service, although prescription drugs and primary care services remain exempt. The law also limits retroactive coverage to 1 or 2 months, depending on the eligibility category. That's all for today. Tune in tomorrow, and don't forget to subscribe to my newsletter, link down below on Substack. It's free.